question becomes, do we fail the 61 so that we could do this method? But if I was to recap over what we've done in the morning so far, we've managed to make sideways up and down, all the way back up, which is really quite clear there. There was a 5-wave move down in the morning, made it to the 161, but there was a 5-wave move, 1, 2, 3, 4, and 5. See that trend there initially broke quite well, get us back up into the 61. When the 61 failed, managed to push all the way up to the 127, 141, where it then came back down and hit that 61. Now from that 61, it's managed to make another 61. Now what's funny is the 61 that's from the very low to high is here, never having ever been tested, forgotten 61. You know, I can see that today it's been pretty adamant on coming back to where it broke the trend. Like, that's not so far off from when it last broke the trend. We can move away pretty decently and make sure that anyone that wasn't in prior to the trend break was part of the pullback. And, you know, with this being a triangle and all, I wouldn't be surprised for us to pull back to it at some point. There's a little B point we've created in a small trend line. And it's like, it's not up to me if the market wants to go sideways like that, absolute ass for like 10 minutes, and people only have a 48-second attention span. How are they going to know that the next thing I have to say could be the most important thing? The last thing I said was incredibly accurate, but how do they know when they sit there for 48 seconds? I don't know, but it's there for the record. All right, nice. So got a movement where we've basically made a similar pattern to what we did in the morning. This kind of movement again. Now, it's not that this one's gotten so far away that it's completely forgotten. There's a chance that we hit it, obviously, but it is interesting to understand that the process that we've had is incredibly similar. Like, what did we do on the way up? Well, we managed to make one really strong pullback, and then, you know, this kind of phasing out towards the top. From that phasing out, we managed to make a small pullback, then a big pullback, then we went down. Oh, and I guess you could say that we even had this little pop at the end here too. And I'll leave that in there. We're going to look at this individually in comparison to this. So is it not true that we pulled up and pulled back to originate it? We pulled back up and started this chop at the top where it came back, made one pullback, dumped down, bigger pullback, dumped down again, and kind of created that motion. So everything that we can see from the high that is that motion, like a 5-wave move that had a smaller move on the end of it. And that's what we did here. But this one also has that same characteristic where it'll have 5 waves and then, you know, the smaller move at the end of it. And, you know, that is what we have here. So technically speaking, this was a process that we used to avoid the 61, and we've went through everything again and also avoided the 61. So there's that. Like, it's exactly the same thing except a different size. That is the pattern of the moment. So we know that there's nothing that's happening that's not part of a sequence that we haven't already done. Now the thing is you could say that this is where the sequence ends, because that's where the next one began. Like, when we ended that last sequence, we started this next one. Understand that that was all of that price action, all of that movement. And then from that movement, the entire sequence started again when the last one ended. Because from the end of the last one, we were able to create the conditions of the next one and start the process again. So debatably, unless we're going to do this again, this is the end of this thing, and whatever we're doing now is a completely new thing. So part of me questions if there was a smaller version that happened inside of here with the pullback and then the chop at the top, and then it fell back down. It's not so far different. Like the idea, the concept of what's going on inside of that smaller area there. It's not perfect by any regard, but what it did do was pull back to its 61 and through it, which is something that's different. Both of these, they need, either one of them did that. And, one line that is disturbing is the blue and blue one, as it has a history of coming back to it over the course of a long time. And I can see, roughly what we did away from it. It's not perfect, but that general area there versus that distance, I'm curious to see what we've managed to do beyond it, whether or not that has any kind of similarity. I'm curious about another thing. The time from that general area to get to this time general area here by not too far off. Like, where are we in regards to this? I'm curious about that time. That's basically the close, actually. At the end of the day, I think everything we've ever done out of the bottom of the blue bar is going to be produced out of the other side of it. And it could influence the break of the red-yellow line. There's plenty of time left in the day. Where we are is ironically coming back up now to the old other forgotten 61. The only other 61 that we can look at now would be the one from the high to low, which is ironically the other forgotten 61. For some strange reason, they both line up together at the same level. And where that level is, I think, is remarkably close to the biggest node on the chart. So, getting back to that big node and attacking that 61 from the underside. I can't help but think when we make, 3 highs, 1, 2, and 3, if when we reverse back to the middle, it will also take 3 to get us there. And there's no way that we could say that we have 3 here. Like, we might be doing the first, because many of the times when we come down on 3, we like to come up on 3 too and end up right back where we started, which is this original sideways consolidation. I think that's very important. It's like it's listening to what I'm saying. Is it not true though? Like, you cannot deny that it came up off of a 3 drives pattern, and I gave that when we were talking about 1 low. I said 3 lows. It made 3 lows, and now look at us. Interesting. But do I expect what worked today to work tomorrow? No. I understand that tomorrow is its own day, and I respect it for what it is. We'll apply the tools to tomorrow just like we did today, and understand that this is bullshit. This little pullback that they've got, it was just for people that are late. The red-yellow line remains the trend I believe is most attractive. Don't make me write in it again. I guess I will, for the sake of it. Because it's not talking about what we wish to happen or what we feel good to happen. I don't ever talk like that. What I talk about is my calculations. The most attractive trend line is the red-yellow line. That's the end of this sequence from what I can see. It will be the end of the sequence. Now, I'll tell you one thing. The red-yellow lines can break like this. Look at this one. It's most difficult in some cases to break the final trend. But what's ironic is it's hardly considered broken when it's treating it like this. If it has to return back to it over the course of a specific amount of time, like this time right here, every single time that dot hits, we seem to be, turning back to it, no? So a constant rate of testing that triangle every 4.5 hours, it drops 76 points, and that never changes. Every 4.5 hours, 76. Doesn't matter how far above we go, how far below we go. So it didn't quite make it all the way down to the blue and blue line, but this is an old blue line. Like in the past, we've managed to move pretty much this far away from it and then come back within this much time. And when I can see that that's how much, we've basically moved away from it. And if I take this and start it there, I can see we've basically spent the same sort of distance away for the same amount of time. And we were looking at that earlier, where that distance is equal on both sides. We have yet to fully connect with it. The blue and blue line's been fully connected with now, and sometimes we've managed to make singular responses to it, but it's not very common that we do that with any of them. It's more common that we chop it and need to respond to it multiple times before actually being able to get away from it. Like, this is our experience with it over the course of a long period of time, but basically hitting it on the 15-minute, grinding it. Sometimes we can snipe it, but then oftentimes it's because we have to hit it many more times, and even spending like a decent like distance away doesn't really change the fact that we're going to come back to it. Even on the other side, you can see the same kind of response, and then even bigger movements, an effort at trying to come back to the blue and blue line, connecting with it from above now on the 1 minute. And it's a very, very precise connection with that same trend line. And I mentioned, before we even got up through the red zone, that I wanted to see us get up and connect with that blue and blue line. Like, I wanted us to go to it. Now we're coming back down to it and people are struggling to buy. I'm like, this is the life we live in right now. That's what they get though at the end of the day. It doesn't change the fact that I believe we'll get on top of everything. It's just for them. And I mean, that's the price of not holding. If it's designed to go after you every day, the short-term traders, right? So you want to make sure that you can adapt to when is a good time to hold, especially if during the holding period, everyone that's a short-term trader is going to be constantly recycled, not able to get their long-term trade back, not able to get back on track, even if they wanted to. Now they're forced to fight the short-term environment, and it is hostile. And I mean, I did mention at the beginning and in all those videos, I even showed you the pictures of the videos today where I was like, and not giving up the trade, making sure you're holding. Holding is key. It will reduce risk. And this is 3 weeks ago. Yesterday, I was talking about how, back in like 2015 and stuff, we would make rising wedges all day, and then it would take all day to play them out. And it would be kind of inching up while it was doing it in a very strange way. Kind of intriguing that, the whole day today is very similar to yesterday in the sense that it had a rising wedge, but it actually played it out today. Whereas yesterday, now we're falling back down to where people tried to short it yesterday. And, that's merely it. It's nowhere near where the institutions began their trade. Just basically short-term positions, like I mentioned yesterday, that'll be easy to sell off, not long-term. Everything that we did on top of the blue and blue line came back down to it. We're hitting B points now as well that are left untested from yesterday. We knew that yesterday when we broke the red-yellow line that any positions weren't safe if they had stops within the path of those B points or within the path of the blue and blue line. And just like that day, we have the same kind of situation where we can get really far away from the red-yellow line. It was all-time high when we were there at that time too. Red-yellow lines, like I mentioned, can have a little bit of an issue. This is the one that I thought it was going to be most like today. But ultimately, it doesn't change the fact that I do believe that it will break and we'll get on top of it, just like we did that time. Can you see how the people of that day or these 2 days might not have thought that we'd be able to so easily just get on top of everything that they struggled with? But it was from a time that it's very unlikely that they would be there. Fought it out like it was nothing and got on top of that. There's also more short-term trends to consider because they shorten the amount of time we're allowed to spend at an important level. Like, we can see on this movement that it's made 5 waves very clearly, more like a cap wave. There used to be a 261 around here, like coming back and attacking it from the bottom is showing that everything that we've done past that 261 has now been bought out back to it. Now, whatever struggle was made on it is now bought out back to that 61. It's designed to go to that 100. Where that 100 is the POC. So that's quite intriguing for sure. Also, will it lead back to the 61? But when I look at that arrow reminds me a lot of this action. You know what that says? That's another arrow on another fib scale showing us that we can go from where we are to the POC, because that's the POC. You know what I'll do? I'll mark it in, because that's the highest POC that we've ever had. Where is it? On the 61, no? Now if I switch it back, it's also on this B point, where our 261 is. So this is also showing the same kind of movement back to the red yellow line. The reason why I'm marking that high of the rising wedge is because if you literally waited until the end of the day and bought at the high of day after the biggest bearish pattern, we just came back for you now. So this again to me is another big move for people that give it up every day. It seems like a big move for them because they trade the intraday session all the time. In my eyes, it's just a little fart in the wind, literally. Designed to be difficult for those people. And it's easy for holders. What do they have to do? Unless you bought yesterday at the high of day, at all-time high, we just came back down to get you. Is that okay? Or is this a huge move that we need to really rebalance the portfolio and stuff, right? No. I look at it like washing out the same people that have been trying to latch onto it for a little while now, and it's the whole reason why we had to use that range in the first place. Get rid of a bunch of people that were long, make it hard for those that wanted to be long. Now we're here again at the yesterday's closing point. It all ends up through the red yellow line by the end of it. You have to treat it like a short-term range. Now, it could mean with the time and space that we have left, we can see that, there's a decent amount of the movement that's already been taken back up. All the fibs are still the same. Every B point is still the same. We still have yet to get the B point from yesterday at the bottom there. And that's not a huge deal either. If you think about where yesterday's setup was that was respectable, it wasn't after the break of the all-time high. It wasn't after the green dash line. It wasn't after we started making the rising wedges. So I'm like, what is it then? Honestly, if you think it was respectable to buy above this point yesterday, then tell me how. The market clearly didn't respect it, so it came back for them. Didn't come back for these people. Didn't come back for these people. Didn't come back for these people. Didn't come back for any of these people underneath any of these red yellow lines. You see how many times it dipped back here? See how many times? I had to make that the most attractive trend line. Look at how far down we got away from it. Oh my goodness, isn't that like today? It's dangerous to be wondering so much in this area because the people that are not exposed to the plan period are jumping through hoops in these environments just to be able to keep a trade for longer than a day. And you have to persist, or you can end up trading in what is the wrong direction for the majority of the day, ultimately to be missing out on hundreds of points of easy holding. I see it doing exactly what it should be doing. Now, this is way late on the plan. Should it be difficult for people that want to be long up here? Is it making it difficult for the institutions to keep holding? No. It is not. Most of the day, like we've experienced in the past, is actually in the wrong direction. It doesn't change the fact that they make the most money when we get through that white dash line at the top there. Just know that. How much till the white dash line at the top there that I believe wholeheartedly that we will go through, regardless of the time? 166 points. But just understand that the institutions definitely aren't starting to buy their positions close to the all-time high or the day that it touches all-time high or anywhere near all-time high. And when the market treats people badly that buy into the support from all-time high, it is the way of 2025. It should be this way. It should be such a small window for people to be able to get lucky on being with the institutions. It should be a very small 5-minute window, and that will be the area. And usually like about 20 potential other windows should come right before it. And every single one of them has to be managed, monitored, and successfully survived to get to the one that actually matters, that will hold. And that's the way it goes, because you don't have a time machine to go to 1 p.m. at the middle of the day where the low that actually is the low of day holds, or all the way till 3 o'clock at the end of the day. You don't get to decide that that's the best place to be long from today. And if you ever want to see a new all-time high again, it's your job to catch the low so that you can be exposed to the all-time high. Now they're making it difficult because it could have, the easy way is a ship sailing over the horizon right now. And that was holding, like, oh, capital letters in my videos and stuff, holding, holding, holding. If you want to make it easy, then you got to hold. And now it's hard. And I'm like, well, you can't mingle strategies together and assume that it's going to work out like that, because there's one right way to look at it. And if you're exposed to every part of the movement, like 100% of the upwards movements, you're doing the right thing 100% of the time up to that all-time high, right? If you caught the hedge, that's great. If you're still holding, that's fine. I don't expect anybody to have bought on the top of yesterday after a huge bearish pattern. We expected it to fail, but it's not a buying point. The buying point was beneath the red, yellow lines. Pick one, anyone. Any red, yellow line. Like when we knew that getting exposure to the red, yellow line not only would break that red, yellow line, but also fuel it forwards and release energy upwards when we break the profit target. If this can break as a threshold barrier that releases energy upwards, like how much more bullish can I be? Was it right for you to be part of that plan? That's like, now what? Now I sit here and I assume it's difficult for people as a result of not following the plan that I've literally tried to get everyone to do. And I'm like, yes, it'll come down to a 5-minute window towards the end of the day most days. Most people won't have it in them to take it. They'll have to trade other areas. All of those other areas are wrong unless they're short-term trades. And I'm like, well, it doesn't pay as much to take them. There's more risk involved to take them. It pays more to hold, and there's less risk involved. And I'm like, what is the reason to not do the thing that I'm saying again? What is this other strategy everyone wants to do? I don't understand. Like, the whole account should be tailored around being able to follow what the market does. Not just some of it here and there. Or you're settling for less and you're getting less out of it when you have the same amount of time on earth as I do. And you choose to not value some things that the market does, or only snipe some things, or only you say that you're better at some things and not other things. I ask why you don't practice the things you're not good at so that you're better at them. So when the market is choosing to do 100% of its time on those things, you're not at a loss. That's the way that I think about it. And I'm like, I don't let myself tell myself that I can't do anything. And if I hear anybody tell themselves they don't think like, oh, I'm a long-term trader, I'm a short-term trader, I'm an option trader, I'm a stock trader, I'm a specialist in some which way, shape, or form. And I close my mind off to any other idea that's not involving my specialty. It's great if you work for a team, if you can rely on other specialists to do the things that you can't do. But that's what they'll teach you to do in school. They won't teach you to be a great individual, and they'll teach you to be part of a team that relies on other team members. And yeah, sure, when you look at them and what they've done and they write reports, they're specialists for those teams. Now people think that they should be like them and study that when they don't even work on a team. I'm like, no, you're an individual. You need to be adaptive and versatile. Big green dash line, red, yellow line hitting. Told you so. That is the most important line. At the end of the day, not for 1 second did I say anything different. It's always that way. Always intended to be this way. Always, since I formed it. And it wasn't about, as soon as the line's formed, we got to get in for it. We knew that there would be much distance and great difficulty potentially in getting to it. And it was pretty much a straight shot. Like I said, from the bottom, if you have any contracts from the bottom and you took some off at the short-term profit, you can let the rest run potentially to a new all-time high, and beyond. We may chop at where we chopped before. Remember, this is the domain of where the POC was. Last minute of the day, bought the whole dump out. We're back at the point where nobody thought there was anything exciting happening when we were here, was there? But then everybody was shocked and excited by this big movement that didn't even connect with the final B point down there, which is it just goes to show all of the upwards movement in the future, one day it will be taken all the way back down and we will hit that B point. The institutions did not start their first trade from here, even though they can buy enough to make the market move like this. Not even 15% of their position that they have to use to make it do this.